Welcome back, everyone. Today we're going to be looking at Himax Technology stock. Now, you may have not actually heard of Himax stock before in the company because this is a relatively small market cap. As of the time of the recording for this video, they come in at just under $2 billion for a market cap. And they are a fabless semiconductor company. You may be surprised at the end of this video to see what this company could be worth. So let's go ahead and take a look. Okay, so let's go ahead and get right into the growth of the company here over the last 5 years. 2017, they did $685 million in revenue, and to 2021, they've grown to $1.5 billion. That is substantial growth. The net income grew from $28 million all the way to $437 million in the last 5 years. We also have free cash flow growth that was negative in the year 2017 at negative $9.7 million, and that has grown all the way to $380 million in the year 2021. So this company has seen very substantial growth over the last 5 years in pretty much everything, definitely revenue, but also you've seen their profitability go from basically nothing to very, very good, very, very quickly. You saw some inconsistency in the last 5 years, mainly 2017 to 2019. There's a lot of negative numbers in there for net income and free cash flow. But semiconductors have been in such demand, it's given this company a chance to really propel itself and start to show some profitability and positive net income and free cash flow over the past 2 years. Again, really impressive growth over the 5-year span, but that's thanks to the last 2 years. However, there was inconsistency before that, so that will affect what we grow this company at down the line in this video, just as a safety margin to ourselves. So continuing on, we want to look at their debt. We take the average last 5 years of free cash flow and multiply that by 3, and that gives us $230 million. We want their long-term liabilities to be under that amount, and indeed they are at $86 million. So now as we look at the current ratio, that's current assets divided by current liabilities. Basically, that's just saying if the company liquidated today, could all those current assets cover the current liabilities? Now, in the case of Himax, they have $1,193 million in current assets, and the current liabilities are $601 million. Typically, I like to see this number close to 2, even though any number over 1 means that they can cover the current liabilities. This comes out to 1.98, so that definitely is in our sweet spot. Okay, last but certainly not least, we want to run a Dcf model on this company. We want to find out what it's worth, but we need to come up first with a reasonable revenue growth rate. Now, the compound annual growth rate over the last 5 years for this company is about 17.7%. However, that's not entirely fair to look at because literally it was that last year that was explosive for them. We're going to go ahead and look at the average analyst over the next year just to at least give us somewhat of a reasonable idea of what our growth rate should be over the next 5 years. And the average analyst is thinking about 11% over the next year for growth. Now, there are not as many revenue estimates for this company into the future because analysts don't tend to like really estimating too far when it comes to smaller market cap companies or companies that have been not as consistent or predictable. I do also want to keep in consideration that the last 2 years have been really good for this company because of the demand that has increased for semiconductors. The 3 years before that really were stagnant. So all things considered, I'm going to go with 5% revenue growth over the next 5 years. Could that be over conservative? Maybe, but I want to give myself a margin of safety here, all things considered. So we grow the revenue out 5% over the next 5 years, and by the year 2026, that gives us about $1.9 billion in revenue. Then we had to apply a free cash flow margin, again, because of the inconsistency with their free cash flow in previous years when it was negative. we didn't have many numbers to go on. I just decided to go by their last year of free cash flow, then divided by their last year of revenue. The margin comes out to 24.5%, but again, because I'm trying to stay conservative, especially with a small market cap company, I go ahead and use a 20% margin. We apply the 20% free cash flow margin to all projected revenues. We have to get a terminal value by applying a weighted average cost of capital and our perpetual growth rate. I use a weighted average cost of capital of 9.5%. I know that seems pretty high, especially compared to other videos I do, but the figure's so high because Himax is, again, a fabless semiconductor company, so their average cost of capital tends to be a little higher. Great, now we have terminal value as well as our projected free cash flow, and we apply our 12% discount rate. We add all these figures up, divide by their shares outstanding, and we come up with an intrinsic value of 26.1, or we'll call it roughly $26 a share. Okay, so fair value came out to about $26 a share based on this model. Last I looked, Himax is sitting around $11.35 a share, so that suggests that the company is extremely undervalued, is already more than a 2x opportunity, and that was all based on just 5% revenue growth over the next 5 years. I will personally disclose, I am invested in this company. It's not like I'm betting the whole bank on it, but I have a reasonable investment in them because I see the potential here. Semiconductors of all kinds are going to be in high demand for, I would imagine, at least the next 2 to 3 years. That is going to give the market plenty of time to realize just how undervalued this company is. Or at least that's my opinion. But again, this company, with a pretty reasonable margin of safety put in, is a fair value of $26. I'm in this stock all day, a little risky because it's smaller market cap, and because of their previous stagnant growth, but I'm personally invested. To me, it's worth the risk when there's this much upside potential. Well, okay, everyone, that's going to wrap this video up. I hope that you found this video to be useful and entertaining. Let me know what you think about this stock down below. Is this a hidden gem, or is this a little too risky due to previous inconsistent years? Let me know how you feel about it down below. And with that, everyone have a great day.